Welcome to the morning show, everybody. I'm glad you guys are here. A little dust up there. It's the Halloween edition, so happy Halloween, everybody. So, okay. Let's go and get started. Okay. All right. Total market cap up 2% from yesterday to $3.784 trillion. 24-hour volume is 171 billion. Bitcoin dominance ticks up majorly to 58.2%. ETH dominance ticks down pretty good to 12.3%. I think Bitcoin was at like 57.7 yesterday, and Ethereum was at 12.5. So going opposite directions here. Bitcoin coming in at $110,366. Ethereum at $38.62. Is it just perpetually under $4,000? Is that the case with Ethereum? That's how it feels right now. XRP, 254. We're going to talk about XRP today. I don't think anybody that likes XRP is going to like the story I'm going to be covering. BNB coin at 1,082. This could be a good accumulation zone for this if we're going to go back up at some point. Solana at $189. Dogecoin at 18.63 cents. Tron at about almost 30 cents. Cardano 61.59 cents. And there you go. Chainlink at 17.32. Check out the price over the last hour. This can't be right. It over doubled. It went up 179% this hour. Wow. That's pretty incredible. I don't know if that can possibly be right. Provenance blockchain. BitTensor, or Tau, Scicoin. Scicoin barely hanging on to that top 100, all the way down to 99. Was as high as the 70s, I believe, maybe 60s. Really sad to see that financial blockchain go down like that. Pump.fun, Zcash, all up 2% last hour. Ethereum Classic, another one we're going to talk about later, 2.1%. So there you go. Share last 24 hours. Shoo. BitTensor up big, Zcash up big, Aster up big. Might be time to get into Aster, maybe. White Bitcoin, Provenance blockchain, Toncoin. What is it? What is on their logo? Hello, Avatar. Okay. Check out the biggest losers of the last 24 hours. Meme coin, Hyperliquid, OKB, Gate.io, all 2% losses. Where is Uniswap? What number is Uniswap these days? 45. Wow. 45. Was firmly in the top 20 at one time. All right. Trump coin continuing to pump. 38.2% for the week. BitTensor is having a really great month. It's up 55.6% at a time when a lot of stuff's in the red. BitTensor, Meme Core, XMR, aka Monero. Trump coin 7.2%. BNB 5.9% for the month. A lot of decent gainers, but got a feeling there's even more losers. Story IP, Avalanche, the Figure HELOC, of course, where I talked about it briefly. Aster, WorldCoin, Flare, Render. Golly, Render is number 100. It's going to fall out of the top 100. I never thought I'd see the day. I thought Render was here to stay for sure, and it'll probably come back at some point. But, man, what a fall. Psy, 33%. Pump.fun, 34%. Caspa, ICP, World Liberty Financial, Arbitrum, Athena, VeChain, Sweet. These all are 30% losers and above. It doesn't get much better if you just go down this way. I mean, tons of stuff is just massively down. This should put it in perspective. See all the green over here? That's about 15 coins. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 13, 14, 15, 16, 17 coins. A lot of those are stable coins. And then is 73 coins of this. 11, 13%, 16%, 18%, 22, 23, 25, 32%, 39%, 58%. So that should really put in perspective the kind of month that the altcoin market has had. It has not been good at all. I'm holding on hope for alt season pump. I'm holding on to hope. I think it's going to happen. But we got to get crypto going in the right direction again. And look, there's no guarantee it happens this year. Maybe it happens next year. You know, we're off the cycle tracks of the 4-year cycle, I believe. So there you go. All right. Check out Bitcoin. This is the monthly chart. I broke out the monthly chart so you guys could see how in the red we are. We've got to get back up over 113 today to finish in the green. And I don't think it's going to happen. It might. It could. Believe it can. But will it? It's a better question. The daily, we got it right down on market site for a couple days ago. See, daily is just ranging. It does look like we're on a little bit of an uptick here. Now we got on the VWAP. Now we're bouncing up. Could be bouncing up. We got a red candle this hour, but it's not that big of a deal. So let's see what happens. All right, on to the news. Scary story for you guys. Zombie tokens, dead crypto projects that still move the market. With so many crypto projects collapsing in recent years, it's surprising that some still shuffle along like The Walking Dead. Despite being abandoned by their creators, millions of so-called dead tokens continue to exist. Some even trade as the industry refuses to let go of the deceased. Wait till you see what coin they put on this list. It's going to be crazy. What are dead tokens and why are they still trading? A dead token refers to a crypto project where most or all development has ceased. The website and social channels have been abandoned and there's no practical use case anymore. Many of these tokens, although dead, still exist on chain and can technically be traded because their smart contracts remain active. Once a token is issued on a blockchain and liquidity pools are created, there's no mechanism to remove it entirely. Trading activity on these projects is usually driven by speculators rather than investors betting on genuine project value. How many dead tokens are there? Roughly 3.7 million out of 7 million projects. So many coins. So many coins. Back in my day, there was only 30,000. Number of dead coins shows by year. Pump.fund is the reason why all these are dying. Pump.fund, you just so easy to create tokens and then leave them, never touch them. In April of 2025, so only 4 months into this year, it was 1.8 trillion or 1.8 million dead tokens. Explosion of new tokens, especially those generated through platforms like Pump.fund, flooded the market with low-effort projects that quickly disappear. That's what Sapien was made for. Go check out Sapien.gg. It's a good alternative to Pump.fund, and there's no dead projects there because only people can put money into them. Okay, so tokens that should be dead but still trade. Luna. The collapse of Terra USD and its sister token Luna in May 2022 wiped out tens of billions of dollars in market value, triggered one of the largest crashes in crypto history. The stablecoin lost its dollar peg, and Luna's value fell by more than 99.99%. Although the original network effectively collapsed, it was rebranded as Terra Classic, while a new iteration of the platform adopted the Luna ticker symbol. In the second half of 2023, the revamped Luna showed signs of a comeback, achieving $1 billion market cap and briefly returning to top 10 cryptocurrencies. However, in 2023, the platform was hacked, causing its value to drop to a new all-time low. Terra's founder, Do Kwon, was arrested in Montenegro in March 2023 and later charged in the U.S. with 8 offenses, including securities fraud and wire fraud. His company, Terraform Labs, filed for bankruptcy in 2024, making the formal end to one of crypto's most notorious ventures. Despite partial recoveries through 2022 and 2023 and 2024, Luna's value dropped again to all-time low and has not regained its former top-tier position. Luna Classic and Luna still actively trade on exchanges. Next is Kadena, a project that we told you about on this channel when it first debuted, and then it went to crap. Kadena Foundation announced in October this year that it would cease operations, citing an inability to continue supporting the blockchain network's development. In an official statement, the organization confirmed it would end all business activity and maintenance of the blockchain. The news sent Kadena's tokens tumbling more than 60% in a single day to a new all-time low. Despite the shutdown, the Kadena blockchain remains online, sustained by independent miners and community operators. And this was their announcement on Twitter, saying it was dead. Major exchanges have begun distancing themselves from the asset. Binance.us announced it would delist Kadena on November 12th, citing low trade volume and insufficient project development. So, Ethereum Classic. If you didn't know, this was the actual original Ethereum chain. It remains one of crypto market's most persistent survivors, a blockchain born from controversy and sustained more by legacy than innovation. ETC was created in 2016 following the infamous DAO hack, which split the Ethereum network in two. The majority of users voted to roll back the stolen funds and continue to Ethereum, while minority maintained the original chain under the principle that code is law. That chain became Ethereum Classic. ETC continues to operate using a proof of work mechanism. Ethereum is now on proof of stake. It records tens of millions of dollars in daily trading volume, though developer activity and adoption remain limited. ETC was trading at around $25.10, according to CNN, which last reported March that ETC suffered a 40% correction in the last 90 days. At the time of this report, the token is trading at $15.70. How about this one, guys? XRP. XRP. Where's the XRP army? Perhaps the most controversial on this list is Ripple Labs. Was once built as a challenger to the global payments network SWIFT, now operates at what is called a crypto zombie. The company's original goal was to modernize international bank transfers through the XRP-based ledger, offering banks a faster and cheaper way to move funds. But that ambition seemed increasingly distant, especially as SWIFT explores its own blockchain implementations. Forbes reported, in terms of global money flows, not much is going on at Ripple Labs today. Really? Nothing's going on at Ripple Labs? And few expected to ever disrupt the Belgian banking cooperative known as SWIFT, which processes around $5 trillion in interbank transfers daily. Despite failing to achieve its primary mission, Ripple's blockchain still operates, including transactions of its native token, XRP, albeit with limited real-world utility. Yeah, 2020 called it with their article back. The token continues to trade heavily around $5.36 billion worth each day and maintains a market cap of roughly $36 billion, ranking it as the 6th largest cryptocurrency by value. Just recently, it was back in the number 3 spot. And here's the thing, guys. How somebody could put XRP on this list and call it a zombie token, it really defies logic. I mean, it's just crazy to say that. But I will say this. I have noticed there has been a lull in the XRP army. Where is the XRP army at? It's like they got the job done, got over the finish line, got an all-time high, and then it's like a lot of them cashed out and got out. And if that's the case, then for a lot of people, then XRP isn't going to have this loud of a voice on Twitter, and that's bad. But I thought you guys would enjoy that. Look at those dead tokens, and they put Ripple in there. Do you think Ripple's dead? Is XRP dead? I don't think so, but maybe put it in the comments. All right, moving on to FedWatch. I want to show you guys this. We are down now 62.9%, 37.1%. 63% that we're going to have another cut in December. Now it's all the way up to 37% that we're not going to. It's slowly approaching 50-50. Yesterday it was at 70-30. Today it's 62.9 to 37.1. I think people are really starting to believe that the Fed is not going to cut rates again this year, which would be really bad for the market. You look here and see what it was yesterday, or on the first day of October, or no, 1 day ago, excuse me, on the 30th of October. You were at 73% yesterday, 63% today, 27% yesterday, 37% today. Those are not good numbers. We don't want to see those numbers. And there's not even an option for a 50 bip raise. So why is all this happening? Crypto's next rally on hold as BOJ and Federal Reserve stay hawkish on December outlook. After weeks of anticipation, the crypto market's long-awaited rebound failed to materialize. Despite rate cuts from the Federal Reserve and the Bank of Japan, both central banks signaled a more cautious stance, leaving risk assets like Bitcoin and Ethereum under pressure and investors uneasy heading into November. Twin policy announcements on October 29th and 30th were expected to inject confidence back into the markets. Instead, they sparked uncertainty as traders digested a hawkish message that suggested global monetary easing may be delayed until further notice. Fed's October 25% rate cut marked its second policy easing this year, but Chair Jerome Powell's comments quickly erased optimism. He loves to do that. He just loves to manipulate the market. Central Bank's updated projection slashed its 2026 outlook for rate cuts from 2 to 4, hinting at a higher for longer environment that spooks investors. Bank of Japan followed suit, keeping rates steady, yet its own forecast reflected growing concern over global inflation and U.S. trade policy under President Donald Trump's renewed tariff strategy. Together, the two decisions signaled that central banks are still prioritizing inflation control over growth, a stance that has left risk assets adrift. Futures markets reacted immediately, pricing in a flatter 2026 rate path. Crypto markets were also swift to respond. Bitcoin and Ethereum tumbled following the Fed's remarks, with liquidations exceeding $700 million. BTC fell below 107,000, while Ethereum sank into the $3,600 range, erasing nearly all gains that were made earlier in October. The timing could have been worse. After October's Black Swan event, which saw more than $19 billion in leveraged positions wiped out and altcoins plunging up to 60% in hours, investors had hoped for a macro-driven rebound. Instead, the renewed hawkishness reinforced caution, pushing traders to the sidelines. Talk about ETF flows here in a second. Excuse me. Cautious optimism heading into November. With central banks sending mixed signals in global sending mixed signals in global trade tensions resurfacing, crypto market appears stuck in a holding pattern. The U.S.-China trade deal, while a positive geopolitical headline, hasn't been enough to offset investor hesitation. For now, the next leg of the bull market seems delayed, not derailed. That's what I would say as well. Traders are watching for clearer inflation data, new ETF inflows, or a shift in monetary tone before continuing to risk again. However, with no data to be released in November due to the U.S. government shutdown, things are looking more uncertain than ever. But after a year defined by flash crashes, tariff shocks, and fake momentum, one thing is clear: crypto's next rally will have to fight its way through a wall of macro uncertainty. So there you go. Crypto market today. Bitcoin slips, altcoin slide as AI spending concerns hits U.S. equities. Crypto prices fell in the past 24 hours, with CoinDesk 20 index losing 1.7% and all members lower. Token prices were hit by sell-off in U.S. equities after tech firms Meta and Microsoft raised their AI investment projections, prompting overspending concerns. Directional cues from derivatives are mixed. Bitcoin futures market is in a state of a consolidation with a clear trend emerging. Now, this story is interesting. BlackRock holds the lines as Bitcoin ETFs reveal fragile foundations, U.S. crypto news. Basically, the point of the story is BlackRock is the only one that's doing well. It's supporting all the others by how it's doing. Which, does that surprise you? It shouldn't if you know who BlackRock is. Welcome to you. Okay, I don't care about that. Crypto news of the day. IBIT's outsized impact and concentration risk. BlackRock's IBIT contributed $28.1 billion in year-to-date net inflows U.S. Bitcoin ETFs, surpassing sector gains and revealing a fragile foundation for institutional adoption. Outside IBIT, Bitcoin ETFs faced negative flows, raising concerns over broader market confidence. On October 27th, U.S. Bitcoin ETFs saw inflows of 1,300 Bitcoin, equal to 3 days worth of new Bitcoin. This demonstrates lasting institutional demand, and nearly all of it goes through IBIT. Competitors continue to face challenges even as interest in digital assets grows. You can see here, IBIT is the first one. So you see how it's been propping up the rest. I mean, look over here at these numbers compared to this. Recent figures show a stark pattern. BlackRock IBIT has driven the net inflows or the net positive flows for U.S. Bitcoin ETFs, outpacing rivals. According to Farsight Investors, U.S. Bitcoin ETFs reported $26.9 billion in net flows this year, but $28.1 billion came from IBIT. Without IBIT, flows in other ETFs such as Fidelity's FBTC, Bitwise's BitB were flat or negative. No BlackRock, no party. Look, this is the overall, and this is the overall without BlackRock. Pretty grim picture there. Reliance on one fund signals a critical vulnerability. If BlackRock scales back, institutional inflows could fade quickly. Meanwhile, Bitwise shows that banks, asset managers, and payment companies treat crypto as a core part of finance, transitioning from niche to mainstream. Large firms are deepening exposure through custody, tokenization, and ETF products. This kind of change would have been unlikely just a few years ago. You see all the crypto custody trading, private crypto funds, crypto ETFs, crypto-enabled payments, tokenization. You see where they all fall on this. BlackRock does everything but crypto-embedded payments. JP Morgan Chase does all of it. It's only one. Oh, HSB. Nope. It's only one. Coinbase. Crypto exchange Coinbase beats Wall Street estimates as trading volume surge. Coinbase Global beat analysts' estimates for third quarter profit on Thursday. Heightened volatility in digital assets boosted trading volumes in the cryptocurrency exchange, sending its shares up to more than 3% after the bell. Digital assets rallied in July as crypto-friendly policies from U.S. President Donald Trump attracted institutional investor, catapulting Bitcoin, the world's largest crypto, to new peaks. However, weak economic data in the following months sparked recession fears. Crypto exchanges benefit from volatility. So there you go. All right, moving on. MasterCard is finalizing a $2 billion deal for crypto settlement platform Zero Hash. So why would they do that? Because they want to do settlements. They want to do crypto settlements themselves. MasterCard is in late stage talks to buy Zero Hash for roughly $1.5 to $2 billion, a move that would deepen the card network's push into stable coins and on-chain settlement. Fortune reported on Wednesday. Founded in 2017, Chicago-based Zero Hash provides the plumbing that lets fintechs, brokers, and merchants add crypto stablecoin tokenization features via APIs, including compliant custody, conversions, and payouts. So there you go. JP Morgan completes first blockchain-based private fund transaction. We just looked at that graphic to show they did private funds. They just started. Mid-tokenization push. JP Morgan, the only one that does everything in crypto institutionally. JP Morgan said Thursday it had debuted a new blockchain-based tool that streamlines distribution and servicing alternative investment funds as the bank pushes deeper into tokenization. Platform dubbed Connexus Fund Flow and developed by the bank's digital asset arm Connexus by JP Morgan aims to give fund managers, transfer agents, and distributors a shared real-time view of investor activity while reducing manual reconciliation and cutting delays in capital movement. So there you go. Cointelegraph's traffic was destroyed by Google's algorithm, and crypto media is in trouble. I'm going to sum up this story for you. Google changed their algorithm, and Cointelegraph is nowhere to be found. You have to go directly to it. Half their visitors go directly to it, which is good for them. But basically, their traffic dropped in half. So fell by 12.4% in August and 14.8% in September. So, all right, guys. Well, I hope you enjoyed the show. Covered all the news. I appreciate you guys for watching. That's all I got. Be blessed. Boy up.